Yeah, absolutely. Let's bring on board Peter McGuire as well and talk about what really is happening across equity as well as crude markets. Peter, hi, morning. Good to have you on the show. You know, much like the equity market volatility, the same has been happening with crude. First, the climb to 40 and now that ease off overnight coming in. Do you think directionally we're headed upwards?
Well, good morning. You know, a couple of things. I mean, we've just seen that huge rally as we all anticipated. I think it just shot the lights out. And, you know, many traders were saying there's going to be an uptick. That was very solidly bought into it, considering where we were only 2 months ago on the crude market. And for any market to put on nearly 80% in 3 weeks was nothing short of astounding. So, yes, profit taking. We understand the second wave. We understand US dollar weakness and general, maybe Wall Street certainly ahead of Main Street. And that's being demonstrated across equity markets with big sell-offs as well.
Yeah, absolutely. So what is it all telling for crude markets? Where is it that directionally we're headed? And do you sense that after this, the weakness that one is seeing across equity markets settles down, we're back to 40 plus levels in crude? Is that where we're headed next?
I think there's so many different components that need to be addressed for that to... first off, we've got to see where that US dollar travels. And it's back at nearly 97 for the US dollar index. So we've had a big sell-off there over the last matter of weeks. Secondly, we've got to see if the momentum's, if this is just a minor blip and all of a sudden this time next week we're back at nearly record territory, or is something far more, and I'm possibly on that camp, which is the Jerome Powell mindset as far as interest rates remaining low for a number of years. Growth is going to be fractured, second wave, and all of those key inputs really create uncertainty leading into this Northern Hemisphere summer. And I think that crude prices, the barometer that they demonstrate, is going to be a little bit softer than where we are at the moment. So I think there's potential for further softness on crude prices, and I think there's downside pressure. So that's where I'm, from a trading perspective, far more bearish than bullish.
Okay, so clearly, clearly bearish, Peter. Also, while we're on crude, let's talk about the cuts, whether or not you foresee further extensions, what you're anticipating in July and then post that as well.
Well, Asia, naturally, you're going to have to worry about compliance. That's going to be the big kicker. If you get compliance across all of the OPEC members, and there seems to be an OPEC plus, of course, that everyone's playing ball, then there are no problems in the sense that I think you'll see further cuts to match from a consumption side going out to, September, October. They'll be sitting on this on a week-to-week basis to see what potential or what consumption is doing as we move forward over that Northern Hemisphere summer. If there are no output issues as far as weather outages with hurricanes or anything along those sort of lines, or geopolitically, then we've just got a normal occurrence coming out of this lockdown. But if we get this second wave and we get a continuation across weakness, which is the uncertainty, then there's no doubt that the market will crater from here. So OPEC and OPEC Plus will play a very strong view on this, and they'll do whatever's needed to try and keep prices at these sort of levels, if not higher. But I think it's going to be a hard ask to try and get over $40 a barrel in the short run. So I think there's further softness and uncertainty for that market.
Peter, you touched upon the dollar, but what's your sense? How do you see this playing out?
US dollar, I think it's a race to the bottom. If it gets to that 94 handle to 94.5 over this Northern Hemisphere summer, which isn't far away, considering we're nearly at high 95s the other day, and we're back at just under 97 now, then I think that Jerome Powell's already told us what the mantra is. Interest rates are staying at record lows. So I think that the dollar was certainly overbought. There's a little bit of a reality check. If risk comes off, then you're probably going to see the dollar, rally a little bit to the upside. But I think that there's going to be enough downdraft over the next matter of a month or two if equities take a backward step that US dollar will come off. Gold will go up. There's going to be, I think, a little bit further push to the upside for the euro. And then, naturally, you're going to see crude weakness. And there's going to be, I think, risk off. So that's going to drive, I think, the trade has got to be gold, and it'll start to rally to the upside. So if you're looking at trading, that seems to be the market with the most potential, I think, in the short run.
That's been the case for a few months now. Peter, great having you on the show and analysing what really is going on with dollar, crude, and where should you be putting your money in the near term. The clear answer seems to be gold amidst all the uncertainty.